We have Dipan Mehta, Director at Elixir Equities, joining us, and we also have Kunal who's joining us in the studio. But Dipan, we'll come to you first. What started off as a tempered start, it took some momentum, but now we've simmered off completely, and we're almost at the day's low. So, what are you making of the market moves that we've seen today? Because at one point, it really did look like we were very close to the 25,000 mark on the Nifty.
Good afternoon, and thank you for having me on your show. Very difficult to really predict and reason why markets intraday movements like this. All I can say is that I think two, three major events that the stock market is looking forward to. One is what is happening in West Asia and how those current issues over there are going to play out. And then there is, of course, the US Fed meet. And most importantly, 9 July is the day 90-day pause ends for President Trump's tariffs. So these are the kind of events that the markets are tracking, and because of that, I think we are seeing some amount of money being taken off the stock market and waiting in the sidelines to let these kind of events play out. At the same time, I think generally, I think the fundamental news flow remains positive. Monsoons are picking up, and interest rate cut also is working out in favor of the equities market. And of course, tax cuts also are having a benefit in terms of higher disposable income. So basically, I think difficult to say why markets were up or down today. But broadly, I think we are in a sideways zone, and that will last until any of these three events, play out completely, which I just spoke about.
All right, that's the take on the markets. We'll try to find out the levels with our techies as well in a short while from now. But before that, ET Now's journey over the past 16 years, just like India's markets journey, has been nothing short of spectacular. The Nifty has zoomed 478% from June 2009 to 2025. Financials now dominate the index with a 34% weight, up from just 11 to 12% back then. And IT has doubled its shares while oil and gas lost the steam. Sharad gets us a look at how the past 2 decades have gone for the market. Sharan?
Well, the journey has been very strong with ET now turning 16. Now, of course, the Nifty return over the last 16 years, that is 478%. Now, let's look at how the composition of Nifty has changed from 2009 and current levels. You see, 11 to 12% was the weightage for financials. That has almost tripled to 34 odd percent. Oil and gas, the weightage has come down. For IT, also the weightage has actually gone up, and interestingly for auto and consumption, it still remains the same. So this is how the Nifty is evolving. Also interestingly, if you look at the overall stocks in the Nifty which have actually survived these 16 years, these are the big names which we talk about daily. HDFC Bank, ICICI Bank, Infosys, HCL Tech. From FMCG space, we have HUL, and also the auto names, Maruti Suzuki, M&M, and even Hero Moto making it to the list. So these are the important companies which have actually stood the test of the time, and they have been in the Nifty index. Now, let's look at the Hall of Fame. What are the returns have been there sector-wise? What overall segments have done well? Auto, 1000% more. Same thing goes for IT and even mid-cap. Interestingly, FMCG Pharma also giving multifold returns towards north of almost 700% plus, while Nifty Bank, that number is also coming in at 69%. Nifty Small Cap, Nifty 50 Index we spoke about, that is also ranging between 400 to 600 odd percent, but towards the lower side, but still at the positive is the Nifty Energy, the Metal, the PSU Bank, and the Realty Pack as well. Also, let's look at the stocks, which are the top multi-baggers in this 16-year journey of the markets. Bajaj Finance, number one, 618 times. Ajanta Pharma, 365 times. Astral, Uno Minda, these stocks have given multifold returns to the investors. Coming to the list, we are also having Eicher Motors, and interestingly, SRF, Navin Fluorine from the chemical space also make it to the list. Smaller names, Aegis Logistics comes up with 128 times growth, followed by TVS Motor, Minda Corp, and interestingly, Trent has picked up, and of course, the recent rally of course we've seen last 3 to 4 years also contributed to the Trent's growth as well. And small names, Chola International, LT Foods also make it to the list. And lastly, Deepak Nitrite also makes it to the Hall of Fame. The rise of retail investors, that has been the strength of India, and also growing with ET Now. Now the Demat account, that was only 1.7 crore in 2009. 16 years years forward, it's 20 crore. And that is the power of the retail. The mutual fund equity AUM, that itself has actually gone up significantly higher. And of course, we have taken the equity segment. 1.42 lakh crore was there in 2009. And now the schemes, the mutual fund houses, all have participated. And you see the number coming in at 32 lakh crore rupees. So the journey has been very strong for the last 16 years. And the journey is expected to remain more strong for the next 16 years.
Very optimistic over there, and indeed it's been a very good 16 years for us at ET now, since we celebrate our 16th anniversary week, and also India's fundamentals looking very sound. But we also have Nagraj Shetty, technical and derivative research analyst, HDFC Securities, joining us on the board, and Kunal once again with us. But I'm going to come back to you, Dipan, because there's something from Sharad's link that really stood out to me, because he said that in terms of returns over the last 16 years, while we are analyzing the performance of the markets in the last 16 years, it's really been the mid cap and the small cap spaces that have outperformed the Nifty. Nifty up 473%, small cap up 605, and mid cap up 997, almost 1,000% run up coming in. Over the longer period, given these numbers as perspective, would you still be betting on blue chips, or do you believe that there are select opportunities in the broader markets that could do much better?
Strategy is to be buy good quality businesses at reasonable valuations. And what is blue chip today may not be a blue chip tomorrow, and what was not a blue chip yesterday may become a blue chip tomorrow. So we don't really look at those, broader markets and blue chip and those categorizations. All I can say is that last 16 years have been great, and ET now also has done a phenomenal job in terms of presenting all the various investment themes, the managements, covering all the news as well as they have done, and we are really happy for that. You've made us more intelligent investors per se. And nothing changes really. I think the investment game has remained the same for the last several decades, and going forward also will kind of remain the same.
Well, indeed, Dipan, but thank you so much for being a part of this journey throughout so many years that I've been watching you as well. But let's also go across to Kunal Bothra, who is here with us. And let me also welcome Nagraj Shetty, who is here with us on the show. But Kunal, let me come to you first. On the markets, firstly, help us with your take on that, because for today we have been off the day's highest point, but a mild recovery from the day's low. How do you see the move going ahead?
There are multiple ways in which we analyze today's move. For example, the Asian indices, I was looking at the Asian markets. Many of these actually closed with a gain of 0.5% to 1% approximately. So that indicates that it's not as if that the sentiment across the board has been pessimistic or negative. There are indices which are bucking the trend and then showing signs of strength, or at least trying to shrug off what's happening across the West Asia. Now the other part is that we've not seen any major spike in terms of crude oil prices over the last couple of days. I think except for that first that single day up move towards $78-80 for the Brent prices. I think we are more or less seeing the asset class consolidating. The only reason why I would probably believe that today's selling, or not just selling, I think it's just 40-50 points down for the index, has happened is because of the option writing which has happened for individual strikes. So for example, right from the start of the day today, 24,900, 25,000 mark, these were the two call options where we were seeing some more pressure in terms of build up of fresh short positions. So maybe that could be just the only trigger where the markets are a little bit more sideways. But the stance which I mentioned even yesterday and today morning, that 24,700 remains to be a crucial support. Till the time we trade about 24,700 mark, the bias for index trader has to be on the bullish side.
Okay, so that's the take on the market today. But Nagraj, coming to you, hi, good afternoon. Give us your sense on the entire IT pack, because over the last couple of trading sessions, even when we have been largely sideways, you have the IT pack that had managed to hold on to some notes of optimism. But today, IT has also slipped into red, a 1% cut coming in. Do you believe that there is more, there are more legs to this IT rally, and today is just a one-off, or do you believe that this surge that we had seen is now coming to an end?
Hi, good afternoon, and congratulations to ET now on the 16th anniversary. Looking back to IT, I think IT has made a low recently and moved up. And overall, if you compare with the IT with the other stocks, IT is relatively very strong on the sectors, and I think the more upside is likely. Currently, is showing some consolidations amid global broader market, benchmark market weakness over the last couple of sessions, and I think the consolidation phase is what is going on in the IT is likely to end soon, and we could see some clear upside bounces in IT, frontline IT stocks, and even mid-cap IT stocks in the coming days.
So that's the take on the IT space. But with this, viewers, it's now time to slip into a very short break.